So many more things that are looking really great for Tesla from today's news. Tesla has increased the price of the long-range Model Y in China by about $350. James says this is just another token price increase. The strategy should be obvious here, so basically he's not really so excited about this, but there is data that would suggest this might actually be fairly bullish, not just because it is the second increase for this exact same trim in a short period of time, but also because the deliveries in China last week were very good. 16,300. If you look at week number 7, at least in the last 4 quarters, basically, clearly this is a record for this week. If we did not have this new weekly record, then I would say, okay, yeah, I mean, the price increase, it's good. It's trending in the right direction, possibly in terms of, yeah, maybe there's more demand. Maybe Tesla is seeing something that we are not. Maybe it's just a trick to get people to buy now instead of later because some people are still waiting for more discounts. But looking at this data, either the price increase actually worked, as in people are rushing to buy vehicles now, or there's actually more demand. Or a lot of these deliveries are just refresh Model 3s. In the ideal world, we would want to see the Model Y demand explode because we know there is high demand for the refresh Model 3. But of course, that is not likely to happen. Except it actually did happen. Look at this Model Y demand and deliveries. This is crazy. The refresh Model 3 is up just a tiny little bit compared to the previous week. Maybe that's because quite a few of them were exported. So looking at this data, I can see why Tesla may want to increase the price again. And to me personally, if you have a fourth price increase of, let's say, $250, $300 for the exact same trim configuration, then I say, yeah, that to me starts looking really bullish in terms of there's a lot more demand. So this is good news for us Tesla stock investors. Yan lives in China, and he says that Chinese consumers generally see this new Tesla price increase as a move by Tesla to rush consumers into placing orders in response to the introduction of new low-priced cars from Chinese brands. But you cannot deny the fact that the sales were higher last week. Tesla has certainly gotten quite a bit smarter about increasing pricing. Instead of just going ahead and increasing the price, they actually let everyone know first, oh, we are about to increase the price, which creates a rush of orders. So it remains to be seen if this actually lasts, but this could be a start of more price increases. With such a strong week, Tesla is actually doing better now than the previous record quarter, which is in red. The blue one actually did not end up being a record quarter. So Tesla can certainly have a record quarter in China. The blue quarter was not as good because of the refresh Model 3s being produced, which meant a shortage of Tesla vehicles because it takes some time to switch production. But it is not just China that is looking good. Europe is trending towards a record in daily reporting. Countries with more Model 3 supply coming off ships should support momentum into late November and December. So James is predicting 480,000 deliveries for this quarter. And we have heard some people say that the BEV market in Europe is slowing down, but looking at year-to-date growth in BEVs, yeah, that does not seem right at all. EV market share is still growing fast. And interest rate expectations are looking fairly good. The market expects the interest rates to start going down around March or April, and Gary says probably the most compelling chart for investors to buy Tesla stock is this chart. Lower interest rates provide double benefit for Tesla. Number one, it reduces the odds that Tesla will cut EV prices again, and number two, long duration stocks benefit most as interest rates fall. Tesla's earnings are mostly in the future, so when you discount these earnings to today, the valuation is then higher if the interest rates are lower because you just don't have other ways to make money, or certainly at least not as much money as with high interest rates because you can just buy bonds and get paid a decent percentage every single year, a guaranteed percentage.